Alrighty, ladies and gentlemen, where's the stock market headed from here? Well, let me tell you where it's headed from here. If you look at crypto first off, okay, crypto has stabilized over the weekend, right? Bitcoin trading 88, 89,000. That was, at the lows, it was down to like 80,000. Ethereum has stabilized now. If we went back just a few days ago, it was 2,700, now just under 3K. So this is a step in the right direction. The fact that crypto stabilized over the weekend. But let me push back against this for just a moment. In order to see real stabilization in any asset class, I don't care if it's a stock, the market indexes like the NASDAQ, the S&P 500, I don't care if it's Bitcoin, I don't care if it's Ethereum, you really need to see stabilization over at least several weeks, if not a month-long plus stabilization period. For an asset to stabilize for a few days, it's a little positive, but it's not like you can't just say, oh, we made it out. We're out to the other side. It's stabilized for 3 days. Like we won. Like it's over. It's all up from here. Doesn't work like that. I can show you every crash period we've gone through. Assets would stabilize for a few days. Remember, many of the biggest up days in stock market history were during the great financial crisis when the market was still crashing. So you would have big bounce back days, right? Where assets would stabilize, things would be like, okay, it's okay. And then they just go lower. 2022 is another good example. Like the market would stabilize for a little short-term period of time. And at the end of the day, where it just keep going, it just kept going lower, right? Additionally, if you look at the Bitcoin cycle, which we'll see if this ends up being correct or not, but as of right now, we're supposed to technically be bouncing when it comes to Bitcoin just a tad bit here for like basically now and maybe the next couple days here. But basically, Bitcoin is supposedly supposed to go through massive downside Thanksgiving to Christmas. Okay, Thanksgiving to Christmas, Bitcoin is supposed to go through major downside. And basically, we can talk about just after Christmas, Bitcoin should supposedly be trading at 60-something thousand. We'll see if this whole Bitcoin cycle thing ends up being accurate or not. But if it is accurate, just understand there's going to be a lot more downside for Bitcoin, which will obviously bleed into the stock market as well, because that's how these financial markets move nowadays, right? After New Year's, essentially, then Bitcoin's supposed to go through a big up cycle until it peaks, we can call it 80,000 plus. And then it's supposed to go through another massive down cycle, bottoming in basically Q4 of next year around 30,000. We'll see. Don't, bank on this happening or not happening. Just keep in mind, if this Bitcoin cycle whole dealio plays out, like this is the way it's supposed to play out. So, don't get too excited, don't get too down, those sorts of things. No, when I look at the market in general, I want to look to the generals. I want to look to the big dogs. I want to look to our fearless leaders. How are the fearless leaders of the stock market doing? That's going to give me some intel on, are we actually getting a real bottom in the market and we're starting to head up from here? Is this just dead cat bounce? So I'm going to look at NVIDIA. Now, there's something I noticed with NVIDIA stock that's very interesting today. I was looking in, the NASDAQ, the Qs are up like 2.5%, 2.7% today. And yet NVIDIA couldn't even match that. Like I'm watching it throughout the trading day and it's only up 1%. It looked incredibly weak on Friday. And you have to ask yourself, if the stock market's ready to bounce, right? If we reach the lows already and we're going to bounce from here, you have to ask yourself, why is NVIDIA not bouncing? Why was NVIDIA not up 5, 6, 7% like some of these other stocks today? That's our fearless leader. That's been clearly the stock that has led us out of the lows of 2022, that peak, that bottom in 2022. The stock that led us out is NVIDIA. It's the big dog of big dogs. So you'd have to think, if there was actually real confidence, we have bottomed out the stock market, all the damage is done, and it's up from here, you would have to assume NVIDIA would lead us out, right? And the fact that that stock is so incredibly weak makes me question things, right? Because on Friday, remember I was on X posting on Friday, I said, NVIDIA had been basically green that entire trading day. And I said, this stock looks like it wants to go red. Keep an eye on it in the last hour. And sure enough, it ended up finishing red. It ended up going down like almost 1%. And that was after almost the entire day it was green, nicely green at that, and it gave up all those gains. And to see it underperform the NASDAQ so severely today, it makes you say, why? Like, well, why is that stock so weak? We know the numbers are great. We know the guidance is great. We know 2026 is going to be great for their numbers, but yet nothing for the stock? Smells a little fishy, does it not? Oracle, look at Oracle stock. This adds to the sketchiness. This stock cannot bounce at all. Like this one just keeps going. Like it's up 0.29% today. Put me to sleep. Like basically the Nasdaq's up like 10x more than that. So the fact that Oracle is so weak adds to sketchiness and makes you say, like, is this really a real bottom today, or is this just kind of a little bit of a dead cat bounce situation in regards to the market? Now, one stock I can tell you that is not dead cat bouncing, it's Google McDougal. This stock is one of the strongest stocks in the entire stock market right now, if not the strongest stock in the entire stock market right now. It is incredible. Stock hitting $319 here today, up another 6.5% in the last 6 months. This stock, and this is a mega cap. So it's shocking it's made this big of a move the past 6 months. It's up 86%, okay? I've got great news for Google McDougal shareholders. If you're a Google shareholder, I've got great news for you, okay? Google stock climbs after this analyst says Google will emerge as a major winner in artificial intelligence and cloud computing. Analyst Nick Jones, who initiated coverage with an outperform rating and a $355 price target, said Google's mix of search dominance, YouTube's ad scale, and steadily expanding Google Cloud business positions it well for the next phase of AI adoption. The analyst said Google's recovery has accelerated in recent quarters as regulatory pressure eased and investor confidence improved around its long-term AI roadmap. He added that the company's ability to show visible AI progress across search, ads, and enterprise workloads could support further multiple expansion. We see Google as an AI and cloud winner, says the analyst, adding that YouTube remains one of the strongest global video ad platforms at a time where marketers are shifting budgets toward measurable formats. Okay, here's the deal. Here's why this matters so significantly, okay, in regards to an analyst like that. Listen, if we went back 6 months ago, 9 months ago, 12 months ago, the analyst community was insanely bearish on Google. Like they just didn't have a lot of positive things to say for the most part. All the Wall Streeters were doubting Google search and disruption and all these sorts of things. Okay, listen, at this point in time, that is a thing of the past. That is a thing of the past now at this point in time. Absolutely no one is doubting Google anymore, which means the stock can continue to see momentum because people are going to look at the stock and they're going to look at it from a risk-reward standpoint of like, this is a moneymaker. It's a stock with insane momentum in a market that is shaky right now, right? And additionally, people are looking at it as not that risky because you took the risk off the plate now. The risk was, they're going to be disrupted by ChatGPT and blah, 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 right? And they're not going to be successful in AI. Now people are like, they're looking pretty darn successful. And I don't know if you guys got to see this news. This was pretty huge. Google Gemini 3 crushes benchmarks and outperforms ChatGPT. Google just delivered something remarkable with Gemini 3 and the launch of Gemini Agent. It feels less like another model drop, more like a blueprint for how AI should slot into real work, not incremental tweaks, a coordinated release that pairs stronger reasoning with practical enterprise-ready tools that can reshape how we handle digital information day to day. Now, this is pretty significant because Gemini 3 Pro just topped everybody on the leaderboard. They basically have this leaderboard which kind of ranks like who's doing the best in regards to their AI models. And Gemini 3, they ran it up on Grok. They passed up ChatGPT. They passed up everything. And so they are number one now at this point in time. And so Gemini is looking pretty darn impressive. I personally use Gemini. Whenever I am using AI, I would say and I don't use it a lot, but if I do, like 90% of the time, I'll use Gemini. 10% of the time, I'll use Grok. I never use ChatGPT. And so, just keep in mind, Gemini continues to be pretty darn successful and get more successful. And that comes as no surprise. Like we know, Google's been way out in front of this, working on this for decades when it comes to this technology, right? Now, that leads me to Salesforce stock, because if you look and you kind of read through this commentary here, right, talking about enterprise tools, talking about how enterprises are going to work in the future and whatnot, right? This is more proof, in my opinion, that Salesforce is pushing in the right direction with their agent force and everything they're up to there, okay? Google will lose to Salesforce long-term when it comes to enterprise tools. When it comes to enterprise cloud, obviously Google's a huge winner there. But when it comes to a lot of these enterprise tools, Salesforce is always going to be great there because they're always going to have tools that are good enough, right? and they have you in the ecosystem. The ecosystem is so important. It's the same reason why people can't leave the Apple ecosystem. Once you have somebody in the ecosystem, you can't, it doesn't matter what phone Samsung comes out with or Google comes out with, like they're not leaving to an Android device, right? And so the very similar phenomenon happens with Salesforce, where they get companies, businesses, enterprises into that Salesforce ecosystem. And once you're in that Salesforce ecosystem, like you're just sold the next product, and you just can't get out. And so Salesforce, like, this is just more proof that they are in the right direction, because the fact that Google wants to push harder means that this is a big opportunity here. And so Salesforce is at the forefront of a next big kind of, in my opinion, positive inflection for their business model over the next several years. And you'll see that really come through with Agentforce and their other products they'll be launching here. Okay. Now, Google McDougal just became my sixth stock in the public count out of my current positions to hit a triple-digit gainer with a 102% gain. That only trails Revolve at 106% gain. SoFi at a 229% gain. Meta at a 432% gain. Elf at an 878% gain. And Palantir at a 2,111% gain. AMD, it was at a triple-digit gainer, but it dropped off. So AMD, next time it bounces a little bit here, we'll be back into the triple digits, and we'll have 7 current positions in the public count with triple-digit gains. And keep in mind, it would be 8 if it wasn't for the fact that I sold Tesla, because Tesla, I put $13,000 into that and made $279,000 out of that. So that was like we can call that like a 2,000% gain or something insane, right? Now, if you want to know the next Google stock, the next one, in my opinion, that's going to make a big run, it's going to be Adobe, in my personal opinion. I think that's the next Google stock type situation here. I think Adobe sets up like Google did last year, where people are doubting it. There's so much negativity around the stock. The stock's down 38%. No one's, looking at them seriously and whatnot, right? And I think Adobe sets up so well. Looking at a stock here that has a forward P of 17, earnings per share growth of very strong double digits expected next year, revenue growth of, double digits. And I think they're going to be doing double digit earnings per share growth for years and years and years to go into the future, right? Their products are very sticky company, right? We're looking at 1000xstocks.com right now, right? Look at the charts feature of Adobe. Does that not look like a perfect stock? Like, it doesn't get more perfect than that. This is where Adobe's at right now. This is where Adobe's been. This is where they're expected to go. That's a perfect stock. Adobe is literally perfection. Look at the margins here. Whenever you can have a company pushing gross margins near 90% and net margins around that 30% number, you're in a perfect stock. And Adobe is that company that pushes these gross margins to near 90% and net margins of 30%, right? It's incredible. Look at the trailing 12-month earnings per share growth of this company, right? It's clearly on the right trend, and look at what's expected to happen in their earnings per share growth over the next year or two. Unbelievable. Additionally, look at the operating cash flow trend. This is where we're at right now on a trailing 12-month basis. Look at the operating income. This is where we're at right now on a trailing 12-month basis. And look at the shares outstanding of Adobe. Down, down, down. So they continue to buy back shares, continue to take shares off the market while their profitability continues to increase. At the end of the day, eventually people will give up on the whole bear narrative around Adobe like they have now for Google, and then they'll start to take Adobe more serious. And so I think if we look out a year from now, I think we're going to have a very similar phenomenon that has transpired with Google in the past year. And people will give up on basically this bearish narrative and be like, okay, we just got to buy the stock. It's a money maker, man. These companies are some of the best business models in the world, right? Adobe's got one of the best business models in the world, bar none. They got a subscription business model that just keeps renewing and recurring and sticky. And it's like they sell more products and services to their customer base. It's incredible. So yeah, that's it. Now take it back to the market, right? My bottom line is I don't trust the market until January. In January, I can begin to trust the market again. But I just don't trust this market short term. I know the market's supposed to be amazing in November. The market's supposed to be amazing in December, right? I don't trust it right now, right? Now, does that mean I'm not going to buy? Heck no. I love to buy in a market that's not trusted. That's one of my favorite markets to buy in. And speaking about that, I just made a big announcement just last night inside the private stock group. I said, FYI, I just bumped the public count to $1,000 a week for buys from $500. I also just increased the amount I will be buying in all my private portfolios each Friday. This is set to run through December 2027. I'll be doing some pretty substantial buying weekly, the next 24 months essentially, right? So I'm bumping because basically I have certain amounts of money that are going to go into all my portfolios, right? The Patreon portfolio is $250 a week. The public count was 500. I'm bumping that to 1,000, and then I have a certain amount that goes into several of my private portfolios as well. I bumped them all up. And so I'm ready to come in with big buys, which means I'm expecting kind of a shaky market here and there. And I see a lot of great deals out there right now. There's so many stocks I want to buy right now. So many that I'm like, I have to up my weekly buys. I have to do it, man. And so I'll be upping my weekly buys for the next 2 years, essentially, and it's going to be fun times, right? I also wanted to draw you guys' attention to this because this matters significantly with this whole market drama recently, right? How often does a stock market decline? 1% drop happens 50 to 60 times a year. A 3% drop in the market happens 7 to 8 times per year. 5% drop in the market happens 3 to 4 times a year. So that's what we had here recently, right? That happens 3 to 4 times a year. 10% drop happens just over every 1 year, so every 1.1 years. A 15% drop happens every 2 years. A 20% drop happens every 3.5 years, and a 25% drop happens every 5 to 7 years. And that's an S&P 500 average since 1928. So basically, looking back at the past 100 years roughly. The moral of this story is when we go through these 1 to 5% drops in the market, don't freak out. Like, that's just normal, man. You're going to have that happen several times per year. This is nothing, okay? 10% drop. Now we're talking. Now we can start coming in with some big buys, right? And keep in mind, if the market ever drops 20% plus, you're in a freak time and you better be buying with both hands as much as you can possibly get your hands on, okay? Because those 20% drops very rarely happen. And it could be years and years before you see another 20% plus drop. So you better take advantage of that. Always remember that, ladies and gentlemen.
Hey, it's Jeremy. I hope you really enjoyed that clip here today. Listen, there are 3 main areas a long-term investor has to understand. You have to understand financial statements, income statements, balance sheets, cash flows. You have to understand and master portfolio management. And you have to have the ability to project what is possible for companies in the coming years. Bearish scenarios, bullish scenarios. All these skills can be learned, and that's the good news. And I'm still just a regular guy who's out here. I just have a lot of passion for the market. I've learned a lot over the last 15 years. I had a tremendous amount of success, and I have a dedication to teaching people everything I have learned in the past 15 years. If I can do it, you can do it too. You can learn all that's required to become a great investor in my private group. The application is going to be down there in the description area. You can click on that, fill out an application, join us in the private group, get access to all my best course curriculums, teaching you everything that I got in my head, and you get ability to join our 6-figure, 7-figure Hall of Fame. We have such a tremendous Discord. It is incredible. So once again, description area down there, there's a link. You can apply to join my private group in there.
Right off the bat here, Bitcoin. Why does it matter to the market? Where's it going from here? Those sorts of things. Okay, listen. We're now in a time period where Bitcoin is very tied to the stock market from the respect of if people want to take on risk, they're going to buy things like Bitcoin. They're going to buy things like higher growth stocks. When these asset classes are going through trouble, a la Bitcoin, it can actually bleed into the stock market now at this point in time. Same way on the other side. If the stock market starts getting shaky, it can lead Bitcoin to start getting shaky, okay? But that's nothing new. The fact that now Bitcoin getting shaky is starting to lead to stock market damage, that's new. That's a new trend in the market. In my opinion on why this is now transpiring like that is because over the past, I would say, year or so, there's been so many Bitcoin ETFs that have popped up, and now it's become much more mass market to invest into Bitcoin, right? It used to be less like people that were like really in the know were buying Bitcoin. This is years ago. Now it's like, people in pension funds are now buying Bitcoin. Like, it's completely changed the game, right? Now, that leads to some potential problems there because I've spoke about this many times. And by the way, I'm wearing a hoodie here today because it's been raining all week here in Vegas. This is the most rain I've ever seen, I think, in my entire life. Well, in my entire time of living in Vegas. I moved out to Vegas in 2015. I swear it's never rained this much. Every single day it's rained so far this week. It's unbelievable. Kind of like the market's been raining, right? But Bitcoin now at this point in time, it's very tied to risk in general. And so what we're seeing is, a lot of weakness in Bitcoin, and it's bleeding right over into the stock market essentially, right? Now, what I'm showing you right now is the Bitcoin cycle, supposedly, okay? So based on this Bitcoin cycle, supposedly there's not supposed to be a bottom until November of next year, ladies and gentlemen. And at that time, Bitcoin's going to be like 29,000. That's according to this. Now, who knows? Okay, who knows? But this Bitcoin cycle, a lot of people do look at this and they put a lot of weight in this. And remember, the problem with Bitcoin is it doesn't come back to anything fundamental. It doesn't come back to earnings like it does a stock, where you say this is a silly PE because they're going to grow at this sort of revenue growth rate and all those sorts of things, right? It's not like real estate where you can say all the homes in the cities trade for around this price per square foot. This neighborhood's this price per square foot. So this house should be this price per square foot, right? Bitcoin, it's whatever the next guy's willing to pay for it. And so people look at a lot of these indicators, like a Bitcoin cycle, to make their judgments on where Bitcoin price is headed from here, okay? So this is just very important for everybody to understand this. And so if you're thinking, is this damage about done? The answer is, if this Bitcoin cycle is accurate, it's not even close to being done. Like, this is just the warm-up phase. We're at the appetizer phase at this point in time, right? And supposedly there's supposed to be a bounce. So supposedly you're supposed to kind of bottom this baby out in, let's say, the low 60s, and that will be in January. And then from there you head up till about March, right? And then you start a massive downward trend, which, we'll see if that plays out. But remember this, if it does play out in the future, like, that's going to be pretty fascinating on that, right? No, this leads to a bigger subject in why this matters to the stock market, is you got to understand margin. Margin, people just think of it as people taking out debt to invest, right? Or trade. And those numbers have gone sky high in the stock market over this, really since we came out of those April lows. We were down to 850 billion in margin. Now we're up to almost 1.2 trillion as of the recent numbers, right around market peak there. Insane. So now, if you think margin's bad in the stock market, understand that's nothing compared to what goes on in crypto. Like, the amount of leverage and degeneracy that goes on in crypto is a whole different level. And so when you're in one of these downward cycles, in one of these downward spirals, you're getting a deleveraging of all asset classes. Now, with that being said, my opinion is this is not a bad thing. This is a great thing. We need a deleveraging of margin. That's not healthy. That's not a healthy market. I want to see a deleveraging of crypto. I want to see a deleveraging of the stock market. Obviously, you'll never take leverage down to zero, right? It's never going to happen. But you can take it down to much more realistic numbers, and that I would love, right? If everybody's over leveraged, you're not in a healthy asset class. Think about the real estate market prior to the great financial crisis, right? And we heard all the stories about, the strippers buying 5 homes and all those sorts of stories, right? You heard back in the day, and the guy that, has 7 rental properties and, bought them all at peak prices and all those sorts of things. Like, that's not a healthy market when people are way over leveraged. I don't care if it's real estate, stocks, crypto, anything like that. Okay. And so when things are really good for a long time, which, keep in mind, things had been great in crypto for almost 3 years. Crypto bottom, Bitcoin bottom, around Q4 of 2022, just like stocks did. And then it was a 3-year massive boom cycle. When things are that good for that long, eventually you're going to start seeing people take out more and more leverage, right? Because they're thinking, man, I could make even more money if I just leverage this out a little bit. Why not, instead of just investing $100,000, I do another $100,000 on margin? In crypto, some of these companies will let you 5x, 10x, 20x. I've seen even I've heard of about 100x leverage. It's out of control. All it can take is a few percentage points of a change downward, and you lose your entire portfolio. It's the most insane thing. But people do that sort of degenerate stuff. It's absolutely out of control. And so just understand what we're going through. This is healthy. This is needed. And what will emerge after this cycle essentially is a much healthier crypto market, a much healthier stock market, which I applaud. I applaud. And also do remember this. I think it's worth mentioning here. A lot of people are worried about the stock market and those sorts of things, right? Just keep this in mind, because people have been trying to bring it back to 2021. Listen. In 2021, people were buying NFTs, right? People were buying land in the metaverse and all this crazy, crazy stuff, okay? Right now, what we have going on in the financial markets, and when it comes to stock market at least, right? People are worried that things are too good. They're worried that NVIDIA's revenue growth is not sustainable. They're worried about depreciation. These are actually, that's one of the healthier things you can possibly have in the market. people being skeptical of growth rates, people being worried about like, depreciation. Dude, that's extremely healthy. Like we're actually in a very healthy stock market right now. People are all scared and worried about that sort of stuff. That's very different than 2021 when everything's going to the moon. The riskiest crypto and Dogecoin and all that stuff was going crazy, and NFTs, and that was just a whole different financial game. Right now people are like, I don't know if I want as much exposure to Bitcoin and Ethereum as I have, right? The two big cryptos. People are like, I don't know about if Nvidia can keep up these sorts of growth rates. I don't know, how's Meta's depreciation schedule going to be 2 years versus 5 years? This is actually intelligent conversation, ladies and gentlemen. This is a very different market than we had in 2021. So how do I feel personally in the stock market right now? I feel extremely good. I feel like maybe we could get a little more downside before year end, right? Get the NASDAQ down a few more percentage points. Maybe, we can call it maybe down 4 to 7 percentage points more. But I actually feel really healthy in this market. This is not a stock market that scares me. Stock markets that scare me is when everybody's only looking to the upside and they aren't considering the downside. And I think we have a lot of considerations for downside right now. And I think that makes for actually a really healthy market and a really healthy setup as we come out of this situation, okay?